Welcome to Buy, Hold, Sell. My name's Matthew Kidman and we've just closed the door on reporting season and it was a real hit and miss. If you hit your numbers, the stocks went up. If you missed, they went down at a rapid rate, especially in the small cap sector. And to discuss what we've just seen over the last month, I've got two of the best known and best read small cap fund managers in the land. Chris Prunty from QVG and Chris Stott from Wilson Asset Management. Chris, I'll start with you. Yep. Real hit and miss. How'd you go and what did you find out?
Oh, how did we go? A lot of hits, a few misses, some winners as usual. Some of the key themes for us were reinvesting back in the business. So a lot of companies have got more confidence around the outlook for the economy now. So we're seeing a lot of companies reinvest that marginal dollar back into the business, which is positive from a longer term perspective. And also the other key theme that I'd call out is some cost pressures appearing amongst different companies. So in particular, electricity prices starting to bite some of the mining companies. South32 called that out in their outlook statements. So they're two of the key new themes, if you like, that re-emerged or emerged for during this reporting season for us. All
right, hold those thoughts. I'll come back to you. Chris, what do you think about those comments? And was there something else that took your attention?
Yeah, I think this was the best reporting season we've seen in several years. So if you think back February last year, the real feature of reporting season was the absence of positive surprise. This reporting season, there were plenty of stocks that surprised on the upside. You saw that in the share prices, and you know, we started pretty soft with that market jitters in early February, but came home very strongly. So
yeah, the first week was terrible, and from then on, it just kind of accelerated to the positive. But is there one sector, couple of stocks that took your attention?
Yeah, what I'd say is domestic cyclicals. So this reporting season was all about old world media, retail, mining services. So it was the cyclicals that delivered the positive surprises.
Just sounds like the 1990s
yeah.
in Australia. Chris, those cost pressures, is there something we should be avoiding now that you've had a good look at what everyone's been doing the last 6 months?
Oh, look, I think one area that looks interesting to us, Matthew, is a lot of the performance through this reporting season has come from the high PE, high growth stocks. So companies like Altium, NextDC, A2 Milk have been some of the best performing companies over this reporting season. So there's been a massive shift, if you like, back towards high PE, high growth companies after a year or so of value outperforming back in 2017. So that's been an interesting thematic that we've seen come through in this reporting season.
But can we play that? Some of those stocks are up 30, 40% on upgrades that were, 3, 4, 5%. And is it too late?
We think that over the next 5 to 10 years, you've got interest rates going up not only here in Australia, but globally. And that's going to lead to inevitably PE contraction, which we're starting to see in pockets. Domino's Pizza is one that I'd call out that's starting to see that significant PE de-rate. And we think that could be a thematic that comes through the overall small cap market in particular over the next 3 to 5 years.
Chris, the good looking people out there like the Altiums and the A2s rocketed, as Chris said, but your assessment was there was a bit of old world stuff that might have been forgotten. So do we go after the high PE, high growth, or do we look back at value and protect ourselves?
I think that's right. A2 and Altium were, cracking performers and they did deserve a re-rate, but if you look at those stocks, their multiple expansion was well ahead of their earnings upgrades, and that makes us cautious. I'd also say that, if you missed like a WiseTech or a BWX, which were high multiple, previously high flyers, they got destroyed. So very
high risk game.
Yeah, very finely balanced. And the thing I like about reporting season is it's where expectations meet reality. So in the domestic cyclicals like old world media and retail, some of those expectations were very low. The companies didn't really have to do much, just grow a little, and very strong re-rates.
All right, you're running in the pack. Where have you positioned yourself?
Well, we've aggressively moved the portfolio towards some of those names. So I'm going to steal Stotty's thunder and say Channel 9 is an example. We own Fairfax. They're examples in the old world media space, but we also own a lot of retail. So Accent was a new addition for us, Adairs, Beacon Lighting, Nick Scali. All of those stocks have fairly modest expectations in the price.
Chris has gone fangless by the sounds of it. How about you, the positioning as we motor off into the next 6 months?
No, Chris and I always tend to share similar views on stocks, so it's no surprise that I'll say that old media is really positioned, I think, over the next 6 to 12 months to be the place to be. It's an under-owned part of the market. Valuations are still very cheap. And you've got not only positive momentum from an earnings perspective, but you've got industry consolidation potential there with the media reforms that were enacted late last year. And Channel 9 is a standout for us. We topped up our position in Channel 9 during reporting season. It's a standout over the next year or two. Our earnings forecasts are well above what the consensus or the street is expecting from that company, and we think that not only they'll get a good outcome with the cricket rights, we think, but also the ratings momentum. They're only just starting to monetise that now, and the operating leverage in these TV businesses is enormous. And the final point I'd make as well is you're starting to see a bit of a shift away from digital advertising back towards traditional means of like TV and radio, and then we think that's a thematic that not only Channel 9 but the wider sector can certainly take advantage of over the next 3 to 5 years.
So some young bucks getting all retro on us.